City cheers, transformational, £22 billion stock exchange deal. LSE takes on the Bloomberg financial data empire with Refinitiv tie-up. Lucy White for the Daily Mail published, 21:51 British Summer Time, the 1st of August 2019, updated, 21:51. BST, the 1st of August 2019. Shares in the London Stock Exchange Group hit an all-time high after it struck a transformational deal that will pit it against the Bloomberg financial data empire. 6 years after the seeds of the tie-up were sown at the Chelsea Flower Show, the LSE agreed to buy data firm Refinitiv for £22 billion. The deal sent LSE shares up 6.5%, or 432p, to 7058p, taking gains so far this year to 74%. Data deal. 6 years after the seeds of the tie-up were sown at the Chelsea Flower Show, the LSE agreed to buy data firm Refinitiv for £22. BNTHE share price surge has added £10.5 billion to the value of the 321-year-old City institution. It is now worth £24.7 billion. The takeover of Refinitiv, which still needs to be approved by shareholders and the competition authorities, comes 2 years after a planned merger with German rival Deutsche Börse collapsed. It also follows a showdown with a major investor and a dramatic shake-up in the boardroom that saw former chief executive Xavier Rolet ousted and replaced by David Schwimmer. The global data Goliath, Refinitiv is one of the world's biggest providers of financial data, such as stock prices. It serves more than 40,000 banks, hedge funds and finance firms in more than 190 countries, and has 19,000 staff. It was previously part of news service Thomson Reuters, founded in 1851 as the world's first financial news service. Last year Thomson Reuters spun Refinitiv off, but retains a 45% stake. Refinitiv supplies software called Icon which tracks stock and bond markets. Its main rival is Bloomberg, founded by U.S. billionaire Michael Bloomberg in 1981. The deal marks a major turning point for the LSE, which wants to branch out into providing data as competition in the exchange sector heats up. Buying Refinitiv, best known among City traders for its Icon information terminal, will pit the exchange against financial media titan Bloomberg. LSE chairman Don Roberts said, "This transaction is a defining moment for LSE Group in terms of its strategic importance. It will create substantial value for our shareholders and important benefits for our customers, employees and other stakeholders." Schwimmer added, "With the acquisition of Refinitiv, we will transform our position as a leading global financial markets infrastructure group." The seeds of the idea were planted more than 6 years ago, when David Craig, who at the time headed the company which later became Refinitiv, was introduced to Joseph Baratta, the head of private equity at investment giant Blackstone. The two began talks over champagne at a viewing of the Chelsea Flower Show in 2013. Craig suggested that the financial and risk division which he ran at Thomson Reuters would be better being spun off, but that such a deal would require an investor with deep pockets. Baratta took the bait, and by the time Blackstone inked its £15.3 billion deal to buy the unit from Thomson Reuters and rename it Refinitiv, some of the firm's dealmakers had already begun to think about selling it into an exchange provider. Now Blackstone and other minority Refinitiv shareholders, including Canada Pension Plan Investment Board and Singaporean sovereign wealth fund GIC, will together hold a 22% stake in the LSE Group. Thomson Reuters, which had still hung on to a bit of Refinitiv, will end up with a 15% stake in the exchange. The LSE will also take on Refinitiv's £10.3 billion debt pile, though Schwimmer said he was confident that the company would be able to pay this sum down quickly. Private equity titan Blackstone stands to almost double its money from a bet on Refinitiv. If it gets the seal of approval from competition regulators, the deal is expected to cut costs at the newly enlarged LSE Group by £350 million. Schwimmer warned there would be job cuts on the horizon, but added that the company would be hiring and investing in high-growth areas. Trevor Green, head of UK institutional equity funds at Aviva Investors, which owns a stake in the LSE Group, said, "This deal will materially accelerate the LSE's move into the data services space and is a major step in making them an even more international